What's going on, guys? So I'm going to do a little training video for you guys. I want to show you guys and kind of explain to you guys, why staying patient can kind of pay off in the long run, right? So you guys may have heard me before, let the first 10, 15, 20, 30 minutes of the day kind of play out. Well, here's a situation where the market kind of opened up a little bit green. We did push a little bit higher, but if you just would have stayed patient and not chased the opening, sort of first hour, hour and a half move and let the day's price action, which price action, all it is, guys, is, the candles. Where are they going? Where are buyers buying? Where are sellers selling, right? So in order to kind of, really, be a master or a consistent price action trader, well, you're going to need price action to go off of. And, typically when the first 5, 10, 15 minutes of the market open, even sometimes for the first hour, if we're in a little bit more of a choppier environment, you're not going to get a whole lot of price action, right? Price action is going to be up and then it's going to be down, up and down, up and down, up and down, kind of sideways. But here's an example that I'm going to show you guys on the triple Qs, which is the NASDAQ 100 ETF. How if you guys would have just stayed patient, maybe that first hour to hour and a half, kind of let the day set up, how you guys would have came on to a really, really good couple of short scalps, right? So if we kind of just look at where the day opened, obviously this lighter gray section is the pre-market and the darker gray section is the market hours. So as the market opened, we did open up over the 20 period moving average. However, we can see here that the 200-day moving average is very, very tight to the 20-day moving average. So anytime they are this tight to each other, we know that either we're going to get a breakout to the long side, right? We're going to get a breakout to the long side, or we're going to get a macro flush to the downside. So with this, we ended up getting pretty much an all-day fade with a few intraday pops along the way. Now, I know some of the people in the Discord today did trade to the long side. Some were profitable. There was a couple of people that were also took a little bit of a hit on the long side, and there was also some people who took some short positions and made really, really good money on those short positions. So just kind of getting into this price action here, if you would have just stayed patient, not taking any trades the first 5, 10, 15 minutes of the day, not taking any trades, maybe the first 30 minutes of the day, maybe not taking any trades like the first hour of the day, to kind of let that price action dictate where the market was going, then you would have kind of stumbled onto this play here at around 7:50 Pacific Standard Time, which is just about an hour and 20 minutes after the markets opened, right? So we're letting that first hour go through the day. Now, that's not to take anything away from taking a play within the first hour. I do it all the time, multiple times a week, but I also understand that anytime that I do take a trade within the first hour of the market's open, generally it's a scalp. Generally, I'm looking for that move to start working in my favor extremely quickly. And if it doesn't, I kind of just either A, cut the loss, or B, take the profits extremely, extremely quick and kind of look for another setup later on in the day that after the price action has kind of dictated, which way we're heading, kind of, hold that trade a little bit longer. So if we just kind of look at what happened here at 7:50 in the morning, we not only did we lose the 200-day moving average, we also lost the 20. And when we lost the 20, the next candle did confirm that price action. And if we kind of look at 369.50, you could have essentially taken a short position here, whether you're trading equities or you're trading options. If you're trading options, you would have bought put contracts, and you could have bought put contracts with the strike price pretty close to like 369.48, and then you could have essentially written this down 1, 2, 3. If you guys are a member in my Discord, I always talk about taking profits in 2s, 3s, and 4s, right? So generally, anytime you get a move in your favor, and now this is mainly for scalpers, right? But anytime for a scalper, if you enter into a trade and you get 2, 3, 4 pushes higher, and pushes meaning candles, if you get 2, 3, 4 candles in your favor, I like to start scaling out profits, if not selling the whole position, right? So I try to size myself accordingly, meaning that, for example, if I was going to play the triple Qs, I'd maybe go 5 or 10 contracts each. And if I get 2 pushes in my favor, I might take out half that position. If I get a third push, I'll take off another one. If I get a fourth push, I'll pretty much clean up my position, right? As you can see here, we get 3 very aggressive candles from a price of 369.50 all the way down here to 368, let's call it, right? So we get a nice push here, get a dollar move down, and then we get a little bit of a bounce. Now I wouldn't have played this bounce just coming up because I know that we have the day's highs are here. We also have the pre-market where we kind of opened up was here. We also have the 200-day moving average, which is here. I would kind of let this come into this area, see, do we confirm to go higher? Maybe this would have been a play to take if we could kind of take out the 371 higher. But then you can see here later on in the day at around 10:20 Pacific Standard Time, you literally got another short that worked out tremendously in your favor. And as soon as we closed below that 20 here and kind of consolidated sideways for 15 minutes, when we started to confirm this move down. Now this move, I remember this move very, very vividly because we were also sitting in a short position on PayPal. And I remember that it was starting to chop around a lot. The price really wasn't doing anything. And then all of a sudden we started to really flush. All of a sudden things really started to move. So you could have, taken this play somewhere between 368.88, and as soon as we confirmed, maybe 15 minutes later, taken this short position, and this went from a price of confirmation from 368.79 all the way down to 365. So almost about a $2.50 move down. Again, you probably wouldn't have caught the whole move, but if you could have caught $1.50, $2 off that move, those contracts would have paid very, very nicely, maybe 20, 30, 40, 50, 60% higher, depending on your entry and what strike price you took. But just kind of want to give you guys that kind of training. If you guys stay patient, right? Don't feel FOMO here. Don't feel FOMO here. Don't feel FOMO here. If you missed a trade, you missed a trade, right? If you missed the opening scalp, it is what it is. Let the day set up, let the price action kind of show you what are the highs and the lows, and then you can kind of take those setups as they kind of show you later on in the day. So make sure to subscribe to the channel. Make sure to give me a thumbs up. Make sure to join the Discord down in the description box below, and I will see you guys all in the next video.